Hello everybody and welcome to the Canadian Money Talk. I have a question here. Does it make sense to hold both VFV and XEQT in TFSA? So two ways to look at this question. One is, so first of all, VFV is the S&P 500 index and XEQT is a worldwide passively managed ETF with about 40% in the US. So first way to look at this question is, do you want to have them in a TFSA in general? You're looking for growth here, so that growth, that capital gain is going to be tax-free, so that's not a bad thing. The one downside of it being in a TFSA is that there's going to be at least 15% withholding of the dividend payouts, which are about 1.5–2% on both of them. So it's not a significant amount. Obviously, you try to avoid that, but the tax-free aspect of any growth is going to be the positive there. So I certainly have foreign dividend payers, but mostly for growth in a TFSA. If the question is intending to say, should I have both of them together in any account, but let's say a TFSA, there is overlap between the two because VFV is 500 of the US largest companies, both from New York and NASDAQ, while the XEQT is 42% in the US, 25% in Canada, which is much higher than the market weight, and then the rest is international. So there will be some overlap between the two in the US factor for sure, but the XEQT is going to give you a nice worldwide coverage and diversification. So from that perspective, it's certainly a good idea to have both of them, but it would be for somebody who thinks the US is going to do well from here on out.